With me just now is Catherine Davenport, who is Head of Member Services at Capital Credit Union, and today we are going to be looking at credit rating and credit scores. So tell me, Catherine, why is your credit rating important?
Your credit rating is really important, and it's important to maintain a good credit rating because that is your access to lending with any credit organisation and any financial institution. A good credit rating will ensure you get the amount of the lending you want at a rate that you want as well.
So by extension, I assume if your credit rating is not good, then you start paying more and borrowing becomes more difficult.
Yes, if you don't have a good credit rating, especially with credit unions, it might not mean you get no credit, but it will mean that you will get a reduced amount, and it could mean that you pay a premium in rate because it does then make it more a riskier business for us to lend to people who don't have a good credit rating. The reason you don't have a good credit rating could be many things, and that's why Capital Credit Union will always look at the score, but they will always look at the reason and try to establish the reason for the score as well. Many other financial organisations won't. They will just look at score only. So it's really important that you have a good score, but you also understand what a score is and how you then maintain and gain a good score.
So you say that a lot of lenders will simply look at the bold figures. What else does Capital look at then, rather than just the score alone?
So we'll look at your score. We'll also look in depth into the actual credit reference and see how the score's been established, because there is many reasons you will have and gain your score. Good scores become for many reasons as being a good payer. So if you have credit and you're paying it back and you're paying it back regularly, then that helps with the score. A bad score is the very opposite of that. It means if you're not paying your lenders and you start to fall behind or you start to default, then your score will drop and it will go down. So then means that is the lending that you want from Capital Credit Union, is that then going to be affordable? Because if you're not being able to maintain and pay your existing debt, then taking on new debt could cause you more problems further down the track.
So you talked there about lending and borrowing. What about credit cards?
So a credit card will affect your credit rating. So again, in many instances, a credit card is a good thing to have because you pay that on a regular basis. So if you take a credit card and say you're paying things off, or you pay lump sums into your credit card, then means that you're getting your credit rating because it shows that you're able to maintain a level of payment to it. Capital Credit Union have a similar idea when we offer our loyalty loans. We have a loyalty loan that is a loan against your savings, which we then report to our credit rating, which is Experian. So we report that you have a loan with Capital Credit Union and you're paying that loan back, then that will help enhance your credit. It doesn't make it always good because there's many avenues in there, but having something like a loyalty loan, which means you're borrowing against your savings, but also it could help to increase. And I say could, but it certainly would help as something you were paying back on a regular basis on your credit rating.
So say I was a 20-something, just out of school, maybe just finished university or college, and I've got no borrowing history. How does that impact on your credit rating?
Again, that can have a huge impact on your rating because there is no history of you. So you're very likely or unlikely to have a good credit rating because you'll have like a middle of the road, just static credit rating, which again, many lenders will then be nervous about. Whereas if you then get some small borrowing, say a loyalty loan, or Capital Credit Union offer a credit builder loan, which is just a small loan just to get you into the habit of responsible borrowing and paying borrowing back and get you used to that. It also gives you a good chance of adding to your credit rating for the future. Similar to adults, there's many people who think by not borrowing it helps with their credit rating. In a lot of cases that's not the case, because in order to get a good credit rating you have to have that borrowing, have that maintenance of paying money back, which then allows you to see and lenders to see that you're paying things back regularly, and that helps your credit rating.
It does seem slightly bizarre that not having any borrowing at all actually impacts you adversely on your credit rating.
It can do, yes, it certainly can do, because there is then no history to score on. Similarly, we find in a lot of instances, if you shop around and use a lot of different lenders, and you're looking for shopping around for rates or various options, that can affect your credit rating as well. And a lot of people don't know that the more people you go to do, the more times they do a search, that could actually affect your credit rating as well. So you've got to be careful if you're using comparison websites to shop around to get rates. Just make sure that they're not credit searching you on each occasion, because that can affect your credit rating as well when you're doing too many credit searches in any one go.
So just finally, can you kind of sum up then what Capital Credit Union can do to help you build your credit rating?
Yes, certainly. What we can do is we can start to have a look at lending for you. We always look at affordability first. Affordability is the one thing that we will never, as responsible lenders, give anybody a loan that they couldn't afford to repay back. Yes, we will use a credit rating, and we will credit score all our members. We use Experian. We use that as a guide just to get the history of experience in borrowing and how your ability to repay. We also then look at your income, your expenditure, and then the big thing is if we think that you've overborrowed, we'll be honest with you and we'll tell you that, but we will always give you options. There is always an option. Even if it's no today, it'll be no today but not never. We will always say, this is what we think we could do to help, but it might not be today, but we will give you options of future borrowing, just so that if you can't borrow today, you will be able to borrow in the future. Also, if we think that you're asking for too much, if we think the borrowing is too high and it's again over your affordability or your ability to repay, we will offer you an option of a lower amount that perhaps is more affordable for you. So we always look at the bigger picture. We don't just take any one thing when we're assessing a loan. We always look at the bigger picture. Can you afford it? What is your income? What is your outgoing? What is your experience with other lenders, including Capital Credit Union? You know, if you have a history with us, you've got a good history of repaying. We always take all of these things into account and do our very best to give you as much as we can, but we will always make sure it's a responsible, ethical loan.
Thank you very much, Catherine, and nice to know that it's not just the credit rating that's taken into account at Capital, that all factors are accounted for as well. Thank you.
Thank you.